Welcome back, everyone, and thank you for joining me again on the Daily Crypto Roundup. Today is one of those sessions where the candles tell a tough story. The crypto market has turned red, down more than 2% in the last 24 hours. Bitcoin is wobbling just above 111,000. Ethereum is under sharper pressure, and altcoins across the board are sliding as traders brace for a storm of options, expiries, macro risk, and regulatory headlines. But while prices are cooling, the news cycle is heating up. The SEC has approved a diversified crypto ETF from Hashdex that bundles Bitcoin, Ethereum, XRP, Solana, and Stellar into one product. Tether is making big corporate moves with a new executive hire and talk of a valuation that could put it near $500 billion. Dogecoin has officially gone Wall Street with its own ETF debut under ticker DOGE. And Europe is preparing a euro-backed stablecoin from some of its biggest banks. Meanwhile, Morgan Stanley has confirmed that its E-Trade platform will integrate crypto trading in 2026, a signal that Wall Street is digging deeper into digital assets. We'll unpack all of it, plus hear from analysts who are split on what happens next. But first, let's set the scene with the top 10 coins by market cap, excluding stablecoins, and their 24-hour performance. Bitcoin is trading around $111,342, down about 1.95% on the day. Ethereum is at roughly $3,985, sliding more than 4%. Solana is holding near $201, down just under 1%. XRP is trading at $2.83, off by more than 3%. Binance Coin sits close to $994, slipping around 1.7%. Dogecoin is at 23 cents, down over 6% as post-ETF hype cools. Cardano is roughly 79 cents, showing weakness alongside the majors. Avalanche trades near $30, also sliding, while Toncoin holds in the $7 range, and Tron is seeing modest pressure around 33 cents. It's a sea of red across the board, with Bitcoin and Ethereum leading the downtrend and altcoins feeling sharper pain. So let's start with the biggest institutional headline. The SEC has given the green light to the Hashdex Nasdaq Crypto Index ETF, ticker NCIQ. This is the first fund approved under the SEC's new generic listing rules, and it's breaking new ground by holding not just Bitcoin and Ethereum, but also XRP, Solana, and Stellar. For US investors, this is a major simplification. Instead of picking coins individually, they can now buy a regulated product that spreads exposure across 5 of the biggest assets in one shot. Some analysts are calling this a watershed for mainstream adoption, the moment crypto moves one step closer to the S&P 500 style basket treatment. But others are skeptical. Bitwise, one of the leading players in the ETF arena, cautioned today that approval doesn't equal inflows. Just because you can list it, doesn't mean institutions or retail will pour money into it. Their analysts pointed out that while Bitcoin has a clear digital gold narrative, and Ethereum has the smart contract dominance story, XRP, Solana, and Stellar are still niche to many outside the crypto bubble. In other words, the ETF may be revolutionary on paper, but it won't automatically attract billions unless the broader market buys into those coin stories. It's a reminder that infrastructure is necessary, but narrative is what drives adoption. One coin that doesn't lack for narrative is Dogecoin, and this week it cemented its place in financial history. The Doge ETF, ticker DOGE, launched in the United States with nearly $18 million in first-day trading volume. That number might sound small compared to Bitcoin ETFs, but the symbolism is enormous. Doge, the coin created as a joke in 2013, the coin propelled into the spotlight by Elon Musk memes, is now a listed Wall Street product. The meme is officially mainstream. Yet markets are markets, and the price tells its own story. After spiking on the news, Doge has cooled back to 23 cents. Some analysts see this as healthy consolidation, others as proof that ETFs don't magically change fundamentals. Still, one prominent chart watcher made headlines with a bold call. If Doge can hold support around 23 to 25 cents and then break resistance between 35 and 40, the setup could open the path towards 75 cents. That's an ambitious target, but it's the kind of moonshot prediction that keeps retail engaged. From memes to money markets, let's talk Tether. The world's largest stablecoin issuer announced that Benjamin Habel, a former Google executive and head of Limestone Capital, is joining as chief business officer. His mandate is to oversee growth, investments, and diversification. That last word is key. Tether is already the dominant player in stablecoins with USDT, but its ambitions are clearly bigger. Reports have surfaced that Tether is exploring a funding round of $15 to $20 billion, which could value the company near $500 billion. Whether or not those exact figures materialize, the narrative shift is clear. Tether wants to be seen not just as a stablecoin printer, but as a global tech and finance powerhouse. Critics are skeptical. Tether's reserves and transparency have long been questioned. But bringing in Silicon Valley talent suggests it's serious about scaling into new areas. Meanwhile, across the Atlantic, 9 major European banks, including ING, UniCredit, DekaBank, and SEB, announced they are forming a consortium to launch a euro-backed stablecoin. The project is expected to go live in the second half of 2026. This is a big deal for 2 reasons. First, it's the strongest signal yet that European financial institutions want to compete with dollar-denominated stablecoins. Second, it adds regulatory legitimacy. Unlike Tether, which grew outside the banking system, this stablecoin will be born from it. Analysts expect it to start conservatively, mainly as a payments and settlement tool inside Europe. But if it gains traction, it could become a rival in DeFi and tokenization as well. Europe is tired of being sidelined in digital assets, and this coin could be its ticket back into the race. Now let's shift back to the spot market because traders are bracing for volatility. A large batch of crypto options are set to expire, and that always brings positioning games. For Bitcoin, the critical zones are around 110,000 on the downside and 115,000 on the upside. Where the price lands could dictate whether sellers take control or whether shorts get squeezed. Ethereum is under heavier pressure. Not only does it have options headwinds, but it's also reacting to macro fears. Traders are assigning a 77% probability to a US government shutdown later this year, and that's spooking risk assets. ETH has already slipped 4% today, and at $4,000 flat it feels fragile. The message is clear. Macro matters, even in crypto. Zooming out, Bitcoin's September performance is positive but uninspiring. Up about 4.3% month to date. It's better than August, but it's lagging both Nasdaq stocks and gold. Analysts like Edward Moya at Oanda say this shows Bitcoin's identity crisis. It's not trading like a high beta tech asset, because Nasdaq is doing better. And it's not acting like a safe haven either, because gold is stronger. Instead, it's somewhere in the middle, caught between risk on and risk off. That confusion is why flows are muted. Institutions aren't sure what bucket to put Bitcoin in right now, and that lack of conviction shows up in price action. Quick word from our sponsor. And this is a timely reminder on a red day. If you're holding crypto, you need to protect it. Exchanges can go down, brokers can lock up, but with a hardware wallet like Ledger, your coins are in your hands. True security, true ownership. There's a link in the description where you can grab one and make sure you're ready for the next big move. Now, one of the more intriguing institutional stories comes from Morgan Stanley. The banking giant confirmed that its E-Trade platform will roll out crypto trading in early 2026. Clients will be able to trade Bitcoin, Ethereum, and Solana, powered by a partnership with Zero Hash. This is significant because E-Trade has millions of retail investors, many of whom have never touched crypto. Giving them access in a familiar brokerage account is a game changer for adoption. It's also a signal of how far sentiment has shifted. Morgan Stanley was once one of the more cautious banks when it came to digital assets. Now it's building infrastructure. Analysts compare it to when Fidelity first embraced Bitcoin, not flashy, but powerful in the long run. When big banks build pipes, liquidity follows. Taken together, today's headlines tell a story of contrast. Prices are down, sentiment is cautious, and the market feels heavy heading into expiry. But behind the charts, the foundations are strengthening. ETFs are diversifying beyond Bitcoin. Dogecoin is now a Wall Street product. Tether is hiring talent from Google. Europe is preparing its own stablecoin. And Morgan Stanley is laying tracks for mainstream adoption. The infrastructure is advancing even as the candles turn red. That tension between weak price action and strong structural progress, is what makes days like today so fascinating. Analysts are as divided as ever. Cathie Wood is doubling down on her $1 million Bitcoin call, arguing that each step toward institutionalization is another step toward exponential growth. JPMorgan strategists are more skeptical, warning that ETF approvals don't guarantee inflows and that macro headwinds could keep crypto range-bound for months. Matthew Dixon points out that even with XRP and Solana joining ETFs, liquidity remains fragmented and retail interest is subdued compared to 2021. The consensus? There is no consensus. Crypto is still a battleground of narratives, and the next decisive move will likely come when those narratives collide with macro events. So where do we stand as of now? Bitcoin above 111,000 but vulnerable. Ethereum struggling at 4,000. Altcoins down across the board. Dogecoin cooling after its ETF hype. Tether making corporate power plays. European banks lining up a new stablecoin, and Morgan Stanley preparing to flip the switch on crypto trading for millions of clients. It's a red day in the market, but a green light for adoption. That paradox is crypto in a nutshell. Volatile in the short term, transformative in the long term. And that wraps up today's Daily Crypto Roundup. Drop your thoughts in the comments. Is this just a healthy pullback before the next leg up? Or are we heading into a deeper correction? Smash like if you enjoyed the breakdown, follow for tomorrow's update, and as always, protect your crypto with a ledger using the link in the description. Thanks for listening, and we will see you at the top.